Hey guys, how's it going? It's Ollie here from CryptoVest.com. It is the 10th of January today, and we're going to be looking at Bitcoin trading against the US dollar over one-day candles. Obviously, it's making the news right now. There's been $8 billion cut from the crypto market all in one go. In fact, if we have a look over the 1-hour candles, you can see that it all happened in one dump. You can see on 6 o'clock UTC time, somebody crashed the market. Bitcoin fell by $250, hit this kind of main support around $3,850, picked back up again, and there's been a little bit of FUD continue now. Some people are starting to sell, some smaller investors you can see here, smaller red candles are now fizzling, and we're kind of holding now to the sort of main support area at the moment. So a lot of people are worried, is this the start of a reversal? Is Bitcoin bearish? Are we going to see 3K and things like this? It doesn't seem that way. Like there's a lot of positive, some positive indicators and signals that are saying that this is just a brief sort of dump. It doesn't even seem to be a correction, and this is probably most likely due to either one of two things. It's mining difficulty has been increasing lately. There was a big crash in difficulty to make it easier again after that sort of Bitcoin hashing war and things like that. But then on New Year's Eve, on December 31st, it started to pick back up again, and there was a 10% increase on December 31st, and then in 3 days and 10 hours time, mining difficulty is going to increase again by 7.4%. So at the moment it's around 5.62 terahash. It's going to increase up to 6.03 terahash. So it's going to pass through the 6 terahash mark. So that means that mining is going to become increasingly difficult. So mining companies ahead of this will need to cash out their Bitcoin into fiat to continue running operations, to pay electrical costs and maintenance costs and things like that. So that could be a reason as to why we're seeing $8 billion leave the market in Bitcoin. And also it could be because it's 2019, a lot of big ICO projects and just generally big projects will need a certain amount of fiat to continue, funding new projects in the new year, paying staff, extension costs and things like that. Particularly like companies that want to move to more crypto-friendly places like Malta and Switzerland. Setting up headquarters in a new place obviously costs a lot of money, so there's a big demand for fiat reserves and things like that. So that could be a reason why we're seeing a dump like this happen today. But looking at a number of indicators, it doesn't look like a trend reversal. The Arun indicator, you can see the Arun upline, this blue line here, is still above the Arun downline, which means that it still favors a favorably bullish trend. On the MACD indicator, you can see the 12 MA is still above the 26 MA. We're above the signal line still, and there's still buying candles on the histogram. We haven't actually seen any red candles appear yet, so it just seems to be a brief correction. So nothing really to get too worried about. And on the Ishimoku indicator as well, on the 1 day, you can see we still have a bullish TK crossover. Candles are just still within that resisting Kumo. So it's not all looking too bad right now. We're kind of hoping this $3,850 support will keep things together. And hopefully the FUD will kind of not get so much into people that we'll see it crash below here. Obviously, we're still in the fairly good zone between the $4,400 mark and the $3,600 mark. This is still a very good place to be right now. Obviously, if we see candles fall below the support and fall onto the $3,600 mark, then we can start to worry a little bit, because obviously nobody wants to fall below this line. This is where we start to get close to $3,000, and that's never a good place to be. So as long as we're sort of oscillating in this particular range, it should be okay. It's a little bit of a shame because everything was looking pretty good up until this morning. As you can see, we kind of broke above this downtrending resistance line. It was looking like it was going to rest along this as a new support, kind of threw back onto this as a new support, and from there, everything was looking promising for a continuation, maybe towards that $4,400 mark, which would have been a really key level to overcome. So, I mean, we're still not out of the woods for that yet, but at the moment, we're just waiting to see what's going to happen at this particular support. So yeah, overall, not looking too bad. I don't think people should worry just yet. There may be an opportunity for whale traders to get in on this crash and continue crashing it. But for now, it looks okay, especially if you look at the shorts market. It doesn't seem to be driven by the derivative market right now. There's actually been a decline in shorts, particularly as we enter sort of 2019. And obviously, this recent crash has actually squeezed a lot of long positions. You can see there's been a big crash in long positions. If you go on the 1 hour candle, you can see it happened exactly at 6 o'clock, which is around the time that Bitcoin crashed. So yeah, so it's actually had a bit of an impact on the derivative shorts market, in the futures market, sorry. So yeah, so it doesn't seem to be something to worry about just yet. But yeah, let me know what you think in the comment section below, guys. Anyway, I'd love to hear what you think about it. Let me know if you're bullish or bearish. Let me know if you do think it's a mining company dump or an ICO or sort of just general crypto project dump. Yeah, I'd love to hear your thoughts on it as always. Please check out the full TA at cryptovest.com, and yeah, please like and subscribe to this video if you liked it. Thank you.